All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's going on, Wale?
Not much, man. Slow day today for me. I don't know
It
about you, but
it has been a slow day, man. I haven't seen crazy moves, nothing crazy except for Intel. Intel hit an all-time high today.
yeah, the 52 week high, 52 week high.
I mean, come on, y'all. Like we've been talking about it, dropped to 19, went back to 20 something, dropped back to 19, and today hit like I think the pre-market was like 37 or something like that.
I think 38 in the pre-market was the
Whoa,
high. Yeah,
even
38.
better,
Yeah.
even better, man. But overall, man, like I've seen kind of like a little bit of sell-off that's happening also, not necessarily like too much, but it's like you can kind of see the people kind of maybe like either rebalancing portfolio or just sitting on the sideline trying to see what's going to happen in the next few weeks. And also, you guys got to remember this is the last week of the month. You know, some people might have been taking profit for the past couple of weeks to close this month out, and we'll see what happened the first week of September. I mean October, and see where exactly the money is going. But overall, the Dow Jones actually on average is up. You know, it was up by 0.65%. The S&P also was up like about 5.59%. The Nasdaq was up 0.44%. So the market kind of did good today because I think the past couple of days we were in the red, but today they kind of went up a little bit. We have the inflation report came in close to expectations, so didn't really move the market a lot, right? We had what do we have? The PCE number that came out didn't really move the market a lot either. So it's like everything kind of like came as expectation. So nothing crazy really happening in the market so far. But again, today was a quiet day. Um, is there things that's maybe driving the market a little bit, to the downside? I don't know. I mean, we have tariff news that came out. President Trump basically put tariffs on pharmaceuticals and big trucks. Like I don't know how's that going to impact the market. I don't know. Nothing really happened. But overall, man, like let me get your feedback, man. I mean, I'm seeing gold. Gold is still up there. Gold is still going up, and I think honestly, the day we see gold kind of drop down like by double digit numbers, I don't know if the market is gonna stay this high for a long time.
Hmm.
So let me get your feedback on today at least, or even this whole week, because it's like I don't. It hasn't been like a lot of big move at all, except for maybe like the couple of things that we talked about.
So, in my opinion, as we start to get into the fourth quarter, one of the things that I will always be mindful of is money managers selling some of their winners going into the end of the year, right? So, it's possible we could see more of that happening. Um, I think most of what all the selling that we've seen is mostly just profit taking. I don't think that there has been any news that has been sort of detrimental. Now, are stocks expensive? I'll say they're not cheap. I'll say that for sure. So I look at the PCE numbers that came out didn't scare anybody. So PCE came in line. If there was one thing that could have like, given people like, oh my God, this could be bad, I think PCE might have been the number to do that, but PCE didn't do that today. It was just
Right.
kind of it was what everybody expected. So with that being said, to me, I'm just looking at the last 2 days of I'm looking at QQQ. So if you look at QQQ, we dropped to a low of what 588.50 that got bought up. We closed with a, almost I wouldn't say a hammer candle, but almost a hammer candle with a wick at the top. Then today, same thing. We saw a drop to about 591.06, and then we closed at 595.97, and you see it kind of formed a hammer candle. So from a technical analysis standpoint, or just looking at the price action, both days the dips got bought. So
Yep. Yep.
not necessarily, afraid of what I saw price action wise today. Another thing I will also keep in mind is when we look at today's price action as well, the RSP actually did really, really good. So the RSP was almost up 1%. So that kind of tells you that it wasn't just concentrated in
On tech or something like
on
that. Yeah.
tech or something like that, correct? So that was also encouraging to see. So I'm not really scared with what I saw. I'm not really alarmed. Another thing too is that I always look at the bond market. I've given y'all what to look for in the bond market. The bond market to me is always going to be more of a telling signal of when a major sell-off could happen. And I'm not seeing anything that scares me in the bond market yet. So I'm not super cautious. Now, I will say this. This is the second year in a row where the Fed cut rates, but the long end of the curve went up. So we look
Mhm.
at the 10-year yield. The 10-year yield was somewhere near 4% before the Fed cut. Now it's somewhere near 4.18%. So the 18 basis points move in like what, a week or two?
Yep. Yep.
That to me is just something to be mindful of and to be cautious about. And I also think that all of this talk about a potential government shutdown also is not helping the bond market. So, you know, that's to me, that's a headline grabber. I don't know if it's a real, I don't know. It could be a real market mover. I don't know. It could be because I'm hearing that they're talking about also doing like massive layoffs and stuff.
Yeah.
It's just a that whole story is a mess. It's a mess. And I don't even want to get started in that.
Yeah.
Let those clowns in Washington figure it out.
Yeah. I mean, but
But
it's all. I feel like it's always a theater show
it's
every
always a theater
time.
show
Yeah.
every time, every time. So I don't even want to get started in that because like I said,
Yeah.
it's just one of those things that I don't see how you keep you see the same problem every single year. Why don't you put procedures in place to avoid stuff like this? But
Because they like it. They like the theatric. They like
yeah,
uh the suspense, and a lot of times they already know what they're gonna do. Like I'm gonna be honest with you guys. Like a lot of times these guys already know what they're gonna do. But they just drag it out to
yeah.
stress people out and all of that stuff. But overall, I think what I've been seeing also is it looks like the Trump administration is actually hiring a lot of people that they fired during the Doge laying people off and stuff because they realize, oh shoot, we actually need these people. So I think they're going back and hiring people back
Oh
up again.
man, talk about a mess. But I don't know. We'll see what happens with all of that. But I will say that you know the way the market is positioned now, it's not surprising that we kind of need to take a breather because again,
Mhm.
the speed at which we were moving was a little bit kind of fast. And at
Yep.
some point, the market has to slow down. It has to check itself, reevaluate itself, and then it decides whether it wants to move higher, trade sideways, or move lower. So at this point, I think we might be in a holding pattern, um,
Yeah.
you know, until the next earnings season kind of comes around. So
Pretty much. And I don't know. Like I'm with you. I'm trying to think. I think we've been in this position before. Where like, okay, where is
hmm
that going to be the thing that's going to either break the market or drive the market higher? At this
hmm
point, right now, we don't know because I feel like all the important news that came out with Powell talking, the market's gonna sold off, came back. Rate cuts, sold off. I mean, went up, came back down. It's like now is gonna be like a time where we really have to like prepare for the future for the things that you might be seeing that should be happening in the next maybe 3 to 6 months. You know what I mean? Those are the
hmm
times like you really have to start doing some digging and figuring out where things are going. Start following the money basically, because it's probably going to be a quiet. I don't know if it's going to be quiet from here on to like the first quarter of next year. I don't know. I don't know.
yeah,
So
we'll see. And like I said, to me, and I'll go back to why I don't go with seasonality. Remember, everybody was talking about how September is like the worst trading month of the year. Let's go look at September. Let's look at
we hit we
September.
hit we hit high on a lot of stocks in
Yeah.
September.
So let's just go look at a monthly chart of SPY for September. So this is why I say don't chase seasonality and don't
Yep.
put the market in a box. Like understand what's going on at a macro level, and then you can start to drill down. So
Mhm.
September, right? If we look at that's the yearly candle. Let me drop down to the monthly candle. Okay, yeah. SPY opened September at 637.
Yep.
We are now at 667, or that was the
Mm-hmm.
high was 667. That's a pretty strong move.
Very,
Let's
very
look at
strong.
let's look at QQQ. QQQ opened the month at 561. We are hit a high of 602. So you can see that September was a strong month. And if we look at IWM, we opened at 231 and hit a high of 247.18. And if you look at most of the indexes going back to April, we have market was up in May, June, July, August, September. So 5 consecutive months on IWM where the market moved higher. And then if we go to QQQ, we have 6 consecutive months where the market's closed higher. And then if we look at SPY, we have 5 consecutive months where the market's closed higher. So could we see consolidation? Could we see a slowdown in the way the markets are moving? Yes, at some point. 5 consecutive months of closing higher than the open, something's bound to happen and slow down. So we'll
Yep,
just,
yep,
you just got to be patient at this point.
yep. And that's the point where it's like you nitpicking basically. You're not really looking at the broader market, but you're looking at like specific stock that might still be undervalued in this crazy atmosphere that we, So
Hmm.
those are the ones you're gonna keep an eye on. But overall, man, like, yeah, I mean, I know you're gonna cover this later on, but what do you do when the market is like overvalued like this, when things are just too high?
Yeah, I wouldn't even use the word overvalued for the market. Maybe I think the fully valued, like Powell said, might be a better. When you
Well,
say
what's the difference between fully
see,
valued and
overvalued means that you're paying over what you should be paying.
so premium
Fully,
basically?
yeah, you're paying a premium. Fully valued means you're pretty much paying what you should be paying.
Gotcha.
Yeah.
Okay,
So if something's like fully valued, it's like, okay, you're not getting a discount, but you're not overpaying.
that's good.
Overpriced is where if you say overvalued, that means you're paying more than you should. So I would say fully valued because again, when we look at stocks, right, it's earnings that drive stock prices. And
Mm-hmm.
again, earnings have been pretty good for the most part. Now, some people will argue that, there are some companies out there that might be overpriced. And we'll talk
Yep.
about one later, but I still think that there's opportunity out there. You know, you just have to really be instinctive of where you're looking. Now,
Yep. Yep.
some of the high flyers that we've seen over the last couple of days, those are the ones that are going to get punished the most, right? Like the Oklos, the IonQs, the other quantum names, right? Because number one, they don't have any earnings, and number
Right.
two, they've been on these monster runs based
Yep.
on future projections. Those would be areas where I'd be a little bit concerned. But when you're looking at some of the quality names out there that actually have earnings, then I think that you'll be fine. One that we talked about that I never got into, missed the boat, and I saw made a big move today. Look at Boeing today.
Yep. Another one. I mean, we've been talking about Boeing.
Yeah, we talked about Boeing late last year. I
Yep.
never got in, was asleep at the wheel, paying too much attention to Intel. Next thing you know, Boeing was down.
Yeah, it doubled in
Pretty,
price since we talked about it.
yeah, pretty much.
Mm-hmm.
Now it sold off from the high of earlier this year in
Yep.
July, and now it's starting to make a decent move higher because I heard that some airline gave them a big order, and then some of their restrictions about inspections before
Being
delivery
lifted.
kind of got lifted today. So yeah, that's it. This is Boeing again. Boeing was a story that, man, I am kicking myself in the foot.
You and I both, man, because I know we give a really good analysis of it too. Similar to Intel, an American
Um,
company, all
God,
of that stuff. But
yeah,
we dropped the ball though. We fumbled
dropped
that
the ball big time,
bag.
big time.
We fumbled that bag for real.
Yeah.
But before we jump into Intel, man, I want to talk about what's going on with Starbucks. Starbucks actually is doing a lot of restructuring, closing
Yes.
stores, laying people off. I mean, again, you talked about this story with GE. You talked about this story, not GE. Is it GE or GM?
GE, GE.
GE. We talked about the story with Intel. Intel is doing the same thing right now, shaving, weights, dropping, things left and right, making sure like they can kind of cut the businesses and be able to figure out how to grow from here. Starbucks is kind of similar, doing the same thing. So,
Hmm.
is that a turnaround story for them? I don't know. This is it remains to be seen. It's the stock hasn't really moved too much since they announced that, but hey.
Another thing about Starbucks that is different from GE and different from Intel is Starbucks is B2C. Intel
Yes. What's up?
Intel, I think Intel, they
Intel
make
serve both.
chips. I think they do, but I think most of their business is B2B because
Yep.
Intel, do they make computers also too, or do they just make
Just the chip.
just the
That's the
chips?
chip. Yep.
Okay, so B2B in this environment to me is always a safer
Yep.
play right now. Starbucks comeback is probably going to take longer
It's gonna
because
take time.
they're going to be dependent on the consumer.
Yep. Yep.
Consumers have to be willing to spend. Right now, if I'm a consumer, I would say Starbucks is a luxury
Hmm.
because I'm getting hit with groceries. I'm getting hit. I don't know about y'all in Georgia, but in California, we getting hit with gas.
Yeah, your guys is gas is unreal.
I'm not going to Starbucks for some coffee. I'd rather just go to McDonald's or go to Burger King and get it for the cheap. I was
Man, if I
talking to
if I live in California, I'll get a slingshot or a bike or something. I don't know, one of those little things.
man,
A scooter.
I was talking to a guy today. He was like, "Yeah, I used to go to Starbucks a lot. Now I'm going to Burger King to buy my coffee or I'm doing my coffee at home."
Oh, yeah.
So, I think the inflation environment is not conducive for the B to C market.
Not,
That's
yep.
just me. That's
Yep.
just me.
Yep.
So, when will we get out of this inflation story? Maybe eventually at some point. Powell
Yeah.
says they're projecting 2028 when we get to 2% inflation.
Yep.
But for the average consumer today, in my opinion, Starbucks is a luxury. It's a luxury. So
Yep.
I don't know how long this turnaround story is going to take. Again, this is something that if you want to wait on, hey, that's good. But just remember, Starbucks is B to C.
Yep.
Intel, the GE story, those are B2Bs.
B2B.
So
Yep.
there's lots of like, more partnerships that you can create deals with and things like that. The B2C restructuring, a lot of it has to do with can your customers afford it? Brand awareness, marketing, all of that stuff is what really matters. So I don't know. We'll see.
Mm-hmm.
Yeah, we'll
Yeah, but
see.
that's actually a good point. Like, B2B versus B2C again,
Correct.
we're in an environment where B2B is probably a better investment for short term.
Yes.
So
Yeah.
yeah,
But
take that and do what you need to do with that one.
yeah, but some of these B2C names, like I said, the two biggest ones that I can think of that are falling on hard times, um, Nike, Starbucks.
Nike,
It's Nike and
Tar-
Starbucks.
Target.
So yeah, Target. Yep, there you go. So if you if you want to wait it out, if you're patient and you believe in the possible restructuring of the company, jump on those earnings calls and kind of listen to
Mm-hmm.
what's kind of going on.
Facts.
So, and just maybe you can wait it out. So, because I remember, man, I missed out. I was talking to somebody through text,
Mm.
and when Nike was like $55, I was like, "Is Nike a buy at this price?" And he was like, I don't know." I might take a flyer on it, but I never did. And Nike is now at 69. So
Mm-hmm.
I could have bought Nike for like $52 and made
A good return. Yeah.
a good return in that short period of time. But like I said, I had my sights dead locked in on Intel the entire time. So
Yeah.
yeah, but sometimes you can't hit on everything. You can't hit on everything.
You really can't.
Yeah, and Nike has earnings on Tuesday, so we'll have to listen and see what they have to say.
They have that
Um,
crazy gap down all the way down to 62, I think. They
yeah,
have a gap to fill. So
yeah,
it's
we'll
gonna be
see.
interesting to see what the numbers
Yeah.
look like.
If Nike comes back down to the 50s, I might take a look and take a
Yeah.
flyer on them. But
Yep.
I still, to me, it's kind of like if I made an investment in Nike at a low price, it's one of those things where it's kind of like I'm not even going to look at it. I'm just going to kind of put it
Just
under
let it
my
go.
mattress and then I'll
Yeah.
check back in like, 2 weeks.
Yeah.
But I still feel that there's still better opportunities out there in my opinion. So,
Absolutely.
yeah.
But yeah, let's move on to Intel, man. I know we talked a little bit about Intel. Intel was roughly up about 4.4% today. I
Hmm.
mean, it hit a 52-week high of 38, I think. And the stock has just been moving, man. And again, it's one of those stories that we talked about since last year. We give a good analysis of what potentially can drive them higher. It looks like almost every single thing we said about what's going to happen is it's starting to happen, and it's happening a lot faster too. So this week, they are potentially in talk with Apple. So they're asking
Mm.
Apple to take a stake in them, whether it's to partnership, collaboration, something. So I think that probably one of the reasons why the stock was moving a little higher today. And also, um, it looks like there's a proposal from the Trump administration for a 1-to-1 ratio of domestically produced versus imported semiconductors. So it looks like there is a potential for them to be able to make a lot of money also from this. So again, everything seemed to be pointing out to Intel for being like an American made company who make chips and all this stuff. And I also see there is probably some talk there might be partnering with TSCSM. I mean, yeah, that's another thing in the talk. So I don't know, man. So that's another big thing too. And I think we talked about this. We said one of those companies is gonna either buy Intel or be in partner with Intel. And it looks like TSM is stepping in there too. So again, Nvidia is already in there. TSM in the talk. Nvidia is in the talk. Maybe AMD might jump in there. I don't know. We'll see. So let's get your feedback on that, man.
So my whole thing with Intel, I mean, Intel's what, up 40% in 2 weeks?
Yep.
Yeah. So my whole take with Intel is, to me, the leadership is showing that they're willing to step outside the box and think
Yes.
outside the box. Because Pat
Yes.
Gelsinger, I think, is it Pat Gelsinger who was the last guy?
Yep.
Yeah. Um, I don't know what the heck he was doing. And getting rid of him was one of the best things that
It's
they
a good
could have did.
decision. Yeah.
Very good decision. So the leadership has taken the company by the horns. It's like we got to be aggressive with what we're doing, right? So I'm happy that the results are starting to pay off, and they're in the business with, to me, with the right partners.
The right partners.
Nvidia is
Yes.
a good partner. Now, the United States government, infusion of cash. I don't know exactly how that works, but I'll accept it as it is. But working with the top, chip designer out there is Nvidia. I mean, is a very good thing. I'll also say this too, is that um I don't know, how should I put it? I think that the Trump administration's sort of kind of forcing things to kind of be produced here gives Intel an edge,
Yep.
because from what I'm thinking, I'm probably thinking that TSM kind of saw the foresight of that, which is why they committed to building those Arizona plants. And I think because Intel is a US based manufacturing company for chips, and what the Trump administration is doing with imports of chips, that kind of gives them a slight edge right now in production. So
Mhm.
that's a very, very good thing. I mean, let me just give you some of these stats about what Intel traded today. So average volume, I don't know what the time frame is, but average volume is roughly 119 million shares. Today, the volume was 268.5 million shares. And if you go look at the October 17th 40 and 39 calls, the 40 calls had open interest of 14,438 contracts. Today, the volume was 83,060 contracts. So that tells you those are new positions. And if I'm not mistaken, most of those positions were executed at the asking price. So these are buys. And some of these buys were not small, which tells you that they were institutional buys.
Mhm.
Let me see. And then if you look at the 39 calls, they had open interest of 38, 3,849 contracts. Today, 34,998 new contracts were traded. This is October 17th, 40 and 39 calls. So something is brewing. We don't know, but there's a lot of money chasing Intel right now. There's a lot of money chasing Intel. I'm the type of person where I can't sit there and ignore it. So I will probably be chasing Intel next
Yep.
week as well.
Because the signals is there. The money is there. Like you can see the
Yeah,
money flowing into those contracts.
yeah.
So it's like, okay,
And $121 a contract and $39 a contract. Yeah, I might have to chase that.
it's a
I might
discount
have
right
to
there.
chase that. Yeah, I might
you
have to
can
chase
you
that.
can 10x that if you really move to the right if you really move to the right direction, you can
Man,
10x
if it
that.
Ooh. So we'll see what happens. We'll see
Yep.
what happens. But I am very, very curious to see what happens with Intel over the next 2 weeks.
Yep.
But
I,
yeah,
I opened New Leaps this week, and it's already up 26%.
wow.
That's my other leaps. I closed it by like 300% or something like that. I closed that one.
Oh
I
yeah,
opened a new one. This is like
yeah,
it's crazy, man. Like
yeah.
people are out here aggressively buying it. So yeah.
Aggressively. Yeah. If you look at the I'm looking at the options chain right now. Yeah, if you look at the October 17th 40 calls, most of these are executed at the asking price. Most
Mhm.
of them. Yeah. So
So somebody's in a hurry to buy
yeah.
those.
So if we get to $40 before October 17th,
We're
I will
not that
be,
far.
yeah, not
We're
that
not that
far.
far. We are
Yeah.
not that far. The way it moves right now, we are not that far. Oh man. But yeah, I hope you guys could take a look at that. Even like if Monday comes and we gap up and we at 40, I mean, yeah, I don't know what to tell you guys, but hopefully you still got an opportunity to jump in when the Monday comes. If you haven't jumped in after all this time, we've been telling you guys to jump in. I really hope somebody listens. Please, Lord.
To me, I also still think that, you know, even though it's kind of made these moves, you still have to prove it on the earnings at
You
some
do.
point.
You
So,
do.
you still got to prove it. So we have to see if the partnerships, if the strategic changes translate into the earnings, because again, the earnings is what's going to drive the
Yep.
stock
Yep.
higher, right?
Yep.
So
But I feel like with those partnerships they're doing right now, it looks like they're almost just raising capital. Like they're just raising capital. You know what I
that's true.
mean?
That's true.
So I
Yeah.
don't see any tangible thing right now. It looks like they're just raising. I don't know. I hope they take that capital and put it to work and be able to actually produce a solid um a product and be able to kind of sell it and be able to make money out of it. You know what I mean? So far, it's all been capital. So just take that and keep it in mind while you're investing in this one.
Go ahead.
No, go ahead.
Yeah. So there's this. We'll probably take this offline, but there's a stock that I've been seeing that has been on a monster tear over the last man. Let me just go back to this chart real quick. I don't know what they do. I don't even. I mean, go look at this chart of IREN.
En.
IREN. Look at this chart, bro.
Whoa. The heck?
What is going on?
What did they? Hold on. I want to know what did they do exactly.
I don't know what they do.
Their data processing service.
So this is what Thinkorswim says. IREN Limited operates in the verticality integrated data center business. It owns and operates data centers powered by renewable energy in Australia, the United States, and Canada. The company grid connected facilities are purpose built for power dense computing applications. It also mines Bitcoin, a scarce digital asset. Okay, so we know what Bitcoin is. The company was formerly known as Iris Energy Limited and changed its name to IREN Limited in November 2024. So this is another data center play that has been flying.
It secured a preferred partner status with Nvidia, so they are partnered with Nvidia.
That's why.
Mm-hmm.
Okay. Okay. Yeah, I'm about to put this one on my list and do some research because any stock that's gone from $5 in April to almost 50 in September has got my full attention.
That's a crazy move, man.
That's a ridiculous move.
Sheesh.
That
Well,
is a ridiculous move because it's
yeah.
almost identical with less drops than APLD.
Mm-hmm.
Almost identical. So
That's crazy. They went from $15 stock to $40 stock. Yeah, they opened this year at like $14, $15. That's nuts, man.
yeah,
Yeah, sometimes some things just run on the side and you don't know until it actually happens. So
man, because I just all I kept seeing every time I see like options flow, their name is very consistent.
mm,
And I was just like, who is this? I've never heard of this name. And then I was just like, let me go take a look one day. And then Lord behold,
they're moving.
yeah, they have been moving. So I'm telling y'all, man, some of these data center plays, man, pay attention to some of these data center plays
Hmm.
because we're hearing a lot of money going in that direction. A
Yep.
lot of money going in that
Yep.
direction. So
Yep.
I'm not saying, I'm not saying buy today, but do your research on some of these names and kind of figure out what it is they're doing. We gave you APLD. Maybe we need to do IREN as well
Yeah.
and do an analysis on them. But yeah, I just wanted to throw that out there because
No, that's a good find, man. I'm actually do some digging in there later on and
yeah,
see
that's how
what's going on with
I'm gonna
them.
definitely spend my weekend doing.
Yep. 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 Now let's move on to Oracle, man. I mean, speaking of data centers and all that stuff, Oracle is has been running like crazy. I
Hmm.
mean, if you guys seen the movie made after the that earnings, but my thing is all of that stuff baked in already, like the high expectations. So is the market aggressively like baking in all that growth that they expect? Because they announced a lot of stuff they're going to be doing. They announced like, investing in a lot of stuff. You know what I mean? So it's like, is the market baking in all this future stuff? So I don't know.
So let me jump into what I've been hearing about Oracle. So one of the things that gave people a red flag about Oracle was they ended up going to the bond market and raising money by issuing debt. They issued about $18 million in debt. And some people were like, that's a red flag.
Mm,
They're like, why isn't it coming from free cash flow? If you're expecting all of this cash flow and expecting all of this revenue,
yeah. Why are you
why
doing that?
would you go to the debt market to raise money? So because of that, you can see Oracle's come down from 345 to about 283. And I don't know if it's going to fill the gap all the way back to 243.
Ooh.
That's a long way down. But I would start looking at 274 all the way to about maybe 260 to see if it finds support in that area. Because if I look, let me pull up Oracle's last quarterly report so that I can see.
Ooh. That's gonna be a crazy drop if that happens.
Yeah, because I saw one analyst on CNBC talking about Oracle's about to drop 40%. And that's a bold statement. That's a very bold statement. So
I
if I
do
look,
not like how they close on the week either. Like that.
yeah, because if I look at the last quarter report and I look at free cash flow for the quarter, let me see. Free cash flow. Yeah, free cash flow was negative
Negative. Yeah.
for the quarter. So that just tells you that they probably were not willing to take out money from cash and use it on their growth. So that's why they went to the debt market. And if I go to their balance sheet, let's just see how much cash and short-term securities they have. Let's see. Short-term cash and investments. Yeah. So cash only. Yeah. So $11.2 billion. And that is down substantially because it looks like they've been making tons of investments. So if you look at their cash equivalents over the last couple of years, 2021, 46.55 billion, 2022, 21.9 billion, 2023, 10.19 billion, 2024, 10.6 billion. So they've dropped $40 billion in cash over the last 5 years, which means that they're investing aggressively in their business.
It's nuts.
So just tells me they just don't have they feel they don't have the cash needed to, I guess, sustain their growth. But I'll tell you what, if they don't hit on those metrics on that next earnings report after taking out $18
Then
billion and
this is
it's gonna hurt the business. So I
yep.
I I hope, because again, when you set the bar that high for your company,
You better meet it. You better
because
meet
the
it.
one thing I will say about Nvidia is Nvidia set the bar very high, but I don't think they had to tap into the debt market and raise money on their monster run. Oracle's tapping the debt market, and we're not talking about smoke. We're not talking about like $1 billion or a couple hundred. We're talking about $18 billion.
That's a lot of money.
That's a lot of money. That's a lot of money. So, and I don't know what the, let's see. Let me see what are the maturities are on that. Yeah, it says Oracle sold $18 billion in investment grade bonds on Wednesday, the market's second largest deal this year, as the software maker ramps up its spending to meet the needs of artificial intelligence boom. So it's issuing debt in six parts, including a rare, listen to this,
Mm.
40-year bond. The note will yield 1.37 percentage points above similarly dated treasuries compared with an initial price talk of 1.65 percentage points.
Ooh.
40-year bond. Okay, well, I mean, if you ain't got to pay it back for 40 years, I guess that's not a bad thing.
But
I don't,
if you don't grow,
that's the key. That's the key. The key.
they're making a big bet. They're making a big bet.
Yeah, they're making a big bet. They're making a big bet on AI. So let's watch. The Oracle earnings are going to be very interesting over the next 2 or 3 years. Very interesting. They're going to be very interesting. So, yeah, pay attention to what's going on there because,
No, this is a risky move, man.
yeah, yeah,
It's a very risky move. Like,
not as risky as issuing debt to buy Bitcoin though.
oh, that's a whole nother
That's a
that's a
whole
whole
nother
nother
story. That's a whole nother story entirely. Yeah, and it says Oracle has about 95 billion of long-term debt outstanding at the end of August.
Eh,
Yeah, man, I'm just trying to figure out who would buy a 40-year bond. Dang. By that time,
somebody will.
Larry Ellison gonna be long gone.
Yep.
Shoot, I might be long gone.
Somebody will give it to their kids or something. I don't know.
Man, a
That's
40-year
crazy.
bond in Oracle. I didn't even know. I mean, I've seen a lot of 30 years, but 40? That's crazy.
That's longer than a mortgage.
So, but yeah, we'll see how this plays out.
Yeah. So I know lastly you wanted to cover investing in a market that that things might be fully valued. Like how do you navigate that? How do you navigate that this environment that we're in? I know we talked a little bit about it, but I know you want to talk a little about it and give more insight into that.
Yeah. So one of the things that I always try to instill in people as investors, not as traders, but this is with investing, is you never want to stop being a buyer of stocks, right? But the speed or the aggressiveness at which you buy should taper off in this type of environment. Because the name of the game long term when it comes to the stock market is buying good names either at fair prices or undervalued prices. And I would say right now, the market is not undervalued by any means.
Right.
Now, is it overvalued? I'd also say no. You're probably paying what you should be paying. So if I'm an investor, I'm not going to stop investing. Like if you're putting money into your 401k or your 403b or your IRA on a consistent basis, every 2 weeks or every month or however often you get paid, you're not going to stop when the market is at an all-time high.
Mm-hmm.
You're still going to be investing. All that means is that your capital is going to be buying less shares, right? You're going to be buying less shares.
Yep.
Those types of automatic investment plans, I would continue to be a buyer of the market, especially since when you're putting money into those plans, you're getting a tax deduction. So there's still a
Thanks.
benefit of putting money into those plans. Now, if you're putting money into an after tax account where you're not getting a tax benefit and the market is near all time highs, if let's say I was putting in $500 a month into like QQQ or SPY or anything like that, I might trim that a little bit. And rather than putting $500, maybe I put in 200 and keep 300 in cash and build the cash position up to a time where I don't know. Let's just see we see another April again. What happened in April?
Yep.
then I would start aggressively buying positions that I've got
Yep.
on my shopping list.
Yep.
So I think when a market is fully valued and valuations are, you know, high or close to high, all-time highs, just don't be an aggressive buyer, right? Now, if you're trending in a sector that may have been a loser for the last couple years, like energy, consumer staples, um, you know, Target, right? Nike. We just talked about Starbucks.
Mm-hmm.
If you're picking out names that are distressed and have fallen on hard times from a long-term standpoint, those would be areas where maybe I'd get a little bit more aggressive, but
Right.
understand the environment that you're doing it in.
Yep.
So if you're buying Nike, if you're buying Target, if you're buying Starbucks, you're buying in an environment where inflation is affecting their customers. So their
Mm-hmm.
growth may still be slow during this time. So you have to tell yourself, okay, what is my commitment level to investing in this company? If it's long term, then to me it wouldn't make sense. But if you're someone who's just gonna, throw money in there, and if nothing happens after a month, 2, 3, 4, 5, 6 months, and you're gonna be like, I'm gonna bail out, then to me it's not worth it. It's not worth it. So, energy has been a top performer this week.
Yep.
Now, whether that translates into a long-term rotation, we don't know yet. I haven't seen the signs of that yet, but we don't know that. So that's just another thing. Rebalancing is very, very important, especially in your long-term portfolios, because
Facts.
rebalancing is what takes money off the top and then reinvest it in some other areas of the market that will eventually come back over time.
Mm-hmm. Mm-hmm.
So, if you've built a portfolio where you say, okay, I've got, 50% large cap, 30%, international, 10% small cap, whatever, large cap has probably gone above that threshold that you originally set. So at some point, you have to trim that threshold and reinvest into other
Invest
sectors of
somewhere
the
else.
market
Yep.
because those other sectors have been slow,
Yep.
like small caps or like international. I think has performed very well this year compared to large caps. So rebalancing is so important, and for most retirement accounts and things like that, you probably want to rebalance at least annually.
Yep.
Quarterly might be a little bit too aggressive, even though there's no tax consequence for doing that. That's okay. But I would say annually or every 6 months and just rebalance
Mm-hmm.
because that's what's going to lock in your profits. If you're doing it in a
Facts.
taxable account, to me, I would look at my positions. And once a position becomes a substantial piece of your portfolio, like Aklo has grown to a point where like I had to tell myself, okay, I got
It's
to be
not.
a little
It's
bit strategic about what I'm doing with
yeah.
this position. And it pulled back like 10%. So that 10% hit still sucks, but it didn't hit as hard because I took some of that money out and plan to
Yep.
reinvest it at another time.
Yep.
So building a cash position while the market is, I wouldn't call it toppy, but it's fully valued is not a bad idea right now.
Yep. Yep.
So that
Yep.
you have the opportunity to deploy that cash when opportunity comes. So that's what I would be doing. I wouldn't stop investing. I would just build up more cash and I would slow down the pace at which I'm buying, especially if I'm buying like tech names, right? Because those things have run.
Mhm.
Those things have run. So be very strategic. Now, when the market, we get another April, we get another time where the market is just getting absolutely destroyed, that's when you got to get aggressive. So
Yep.
just understand when to get aggressive, when to pull back, and things like that. So
Absolutely.
yeah,
Absolutely.
yeah,
But like you said, bottom line is don't stop. Don't stop investing.
yeah.
You
Don't
just you,
stop. No,
yeah. You just gotta be more selective, and
selective. Yep,
manage your risk a little better,
yep.
and dollar cost average, but don't deploy everything you have. I feel like we
Hmm.
we we repeat the same lessons
It's
every
true.
time.
Yeah, it's true. It's true. But like I said, if we go back to April, because remember we were talking when we were talking about when the market was selling off, because the market kind of started selling off a
Yeah.
little bit after Trump got elected.
Yep.
and we had a rough couple months, and we kept saying that,
Mm-hmm.
okay, we don't know where the bottom is. But if you dollar cost average strategically on red days, you're probably going to be in a better
You're probably
position
gonna be,
long
yep,
term.
when it comes up.
So if you just went on every red day and just dollar cost average all the way through April, and then you rode the wave from April till now, boy, you are in a very, 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 very,
You
very,
were
very good position right now.
you were in a really good position, you know. And I
Yeah.
think we said it too, like, if you like doing like a 401k or something like that, and you increase your contribution after
Contributions.
after the whole big drop that we had, you should be in a really good place right now.
Yeah.
You should
And
be in a
like I
really
said,
good place.
I would be lying to you if I told you that I thought that the comeback would be that aggressive, right?
Bro, it's crazy.
Kind of like when we saw during COVID. Like I would be lying to you if I told you that the market was going to bounce back that quickly,
Mhm.
but it did.
Yep.
And for those that actually took action when the market was selling off, I mean, you're probably happy. So again,
Bro.
when people are being greedy, just scale back a little bit. Scale
Yep.
back a little bit. If you've been putting up $100, into a QQQ or SPY into a stock that you like, maybe trim that down. Sit on a little bit more cash,
Mm-hmm.
take some
Mm-hmm.
profits off the table,
Mm-hmm.
and just be a little bit more strategic. Because again, you're not getting anything at a discount except for a certain sectors that haven't really done anything. You're not,
Yep.
So I would be patient and just wait for opportunity to strike.
Yep. A
So.
pullback is coming. We don't know
Yeah,
when.
we don't know when, but
We don't know how.
we always exactly we don't know what's going to be the catalyst for a
Yep.
pullback, but we
Yep.
always know that something will happen. Like
Yep.
it could be this whole government shutdown next week. Government might shut down,
That might be the reason. Yeah.
market might pull back, and then you got to start saying, okay, what are some things that I can look at to buy at a
Absolutely.
at a cheaper price?
Absolutely.
So
Yeah.
we don't know what it's going to be. You just got to pay attention and again, you want to be in a position to take advantage of these pullbacks. That's the biggest thing. That's the biggest thing.
Yep.
So
Yep. All right. With that being said, man, what's going on next week? I haven't even get a chance to look at what's the market, what's the economic calendar for next week. Do we have any big news coming up next week at all?
nah,
Nothing.
the only thing that I was looking at was Nike earnings next week Tuesday. That was about it.
Yeah, there's not a lot of stuff. I'm looking. Yeah, there's not a lot of stuff coming up next week at all.
No.
So again, it's gonna be a slow week. If you guys pay attention, like the days that we see the market running is because of a news so far. It hasn't been like because the market is just doing what the market's doing, but it's been a lot of news moving and all this stuff. So
Yeah.
yeah, yeah.
Because we're pretty much through earnings season for the most part for a lot of companies. We're going into another season of earnings.
Mm-hmm.
So that will start because this is what October, November.
Yep.
Yeah, we got 3 months left for the year. Okay, so yeah, so we'll be going into the fourth quarter next year. So we'll see what happens. But I don't know. I'm optimistic that there are opportunities out there. You just gotta dig. You just gotta dig and be patient. But
I mean,
um,
we give a lot of good sectors or good section of the market to focus on. I mean, I'm still really crazy pro the nuclear move. I'm still crazy pro the data center moves. All of that stuff. Like we still have those stocks to focus on. Actually, CPI is next week.
is it?
Yeah, October 2nd.
Let me see.
And PPI is Tuesday. So those might be good numbers to keep an eye on.
No, October 15th is CPI.
Oh, why is it giving me October 2nd?
October
Interesting.
October 15th is CPI, and then October 15th is PPI.
Okay.
Yeah, I have the U.S. Bureau of Labor Statistics calendar posted in my room.
Oh, hopefully they didn't change it on you.
Oh, I hope not.
That would be funny if they change it on you.
I hope not.
Oh
Uh,
man.
I hope not. And then we've got
Yep, October
FOMC.
15th. Yep.
Yeah, and then we got FOMC on the 29th. So
Yep. 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 But yeah, other than that, man, any Any last minute thing you want to give to the people before we wrap up for the weekend here?
Nah, I think, like I said, I think the biggest thing, if you took anything away from this week, is sit down and start analyzing the data center movement.
Yep.
Again, I think that there are names out there that may not like catch the headlines, but I would sit there and dissect that entire build out. Like, okay, you build a data center, what goes in the data center that I can invest in? And I don't know, we'll see. I keep hearing this thing a lot. People keep talking about like, is this another like .com bubble? Like, are we getting to a bubble? Like, are we? And I keep hearing that, and I can't sit here and say that we are, because again, a lot of the companies that are driving where the market is moving, right? Because again, remember that the market basically moves with mostly by Apple, Nvidia, Microsoft,
Microsoft.
Google, Amazon, Meta,
Mm-hmm.
and I think who's the other one? Tesla is a lot.
Yeah,
Magnificent Seven.
yeah, they add Tesla today. Yep.
So to me, all of these companies have earnings. Like all of these companies have earnings.
Mm-hmm.
They're actually making money.
Yep.
1999, 2000, there was a lot of companies that were not making money.
But
That
it was, you can't, I agree with you. You can't really compare it to the .com time, because
can't.
.com, everybody who was able to create an internet company was getting bought up or people investing in it. You know what I mean? So it's like, there was some crazy business that came
I
during
mean,
the
it was. I
.com.
mean, I'm telling you, it was just. It was like these companies had no earnings. They weren't really doing nothing. Some
No,
of them, I don't even think some of them had a product.
nope. It was just like somebody just built a website and said, "This is what I do," and people were like, "Oh my god, yes, it's gonna be the next big thing."
Exactly.
Just
So,
buying it.
so that is something that, you have to be very wary of. Now, we'll say this. There are like Oklo, right? They're a pre-revenue company. A lot of
Yes,
these quantum names are
names.
pre-revenue company, but they're actually building a physical product, right?
Mm-hmm.
Oklo, to me, Oklo, Oklo's not going to get I don't think that the government is dumb enough to give a company approval for something that's not buildable
Yep.
or that's not scalable, right? So to me, the government backing of Oklo gives me confidence that they will hopefully stay on track
Mm-hmm.
to deploy their product by 2027. That to me, I keep telling people that's a very, very key element to this whole story is,
Facts.
will they hit any hiccups along the road to get
Facts.
to their product deployment in 2027? That could change the whole story. And that's why
Mm-hmm.
you got to listen to the earnings reports. But so
Yep.
far, everything is on schedule. And again, I keep saying that I think one of the board members is now the energy secretary for the United States. He gonna sign his name on what needs to be done, I'm
Oh
pretty
yeah,
sure.
because
So
he has some stocks. He
I'm
has
pretty
something.
sure he still has
Yes,
some,
he has
he should have
equity.
some skin in the game. I'm pretty sure. I don't know if they made him sell. Maybe they made him sell. I don't know. But we're you're we're relying on something that is not physically in operation yet, but it's in process. So
Yep. Yep.
yeah, just
Well,
keep that in mind.
with that being said, man, we came to the end of today's episode. We definitely shared a lot of stuff. I mean, the market's gonna quiet. It's probably gonna be quiet for the next couple of weeks or so, but it's a really good time to start diving into doing some research and all this stuff. Even though the market is closed on the weekend, you should not be closed on the weekend. You should be out there researching and doing some stuff, because that's the only time you can kind of gain an edge on the market, right? By looking at the weekend and stuff. But other
Correct.
than that,
Yeah.
please share, subscribe, tell the people about us. We can't wait to come back next week and then let's see what's happening with the market on the first week of the new month. So we'll see
And the
how the market.
last quarter of the year.
Yep, we'll see how the market react to it. It's the fourth quarter. Let's see what happens. Crazy things usually happen in the fourth quarter. So let's see.
Yeah, we'll see. And we'll, like I said, I think the other thing for next week, even though it's not a headline for economic data, you got to see how the market's going to react to this whole government
Yep,
shutdown stuff.
yep,
I,
yep.
I think that's the biggest. That's the
That's probably the
biggest.
biggest news.
That's the
Yep,
biggest news right now.
yep, yep.
So we'll see if the elected clowns in Washington will figure it out.
Ah, those people.
The
Those
circus,
people.
the circus.
But other than that, man, y'all have a good weekend. Stay safe, and we'll see you guys on Wednesday.